I think if we went into the year, most people would not have been predicting that, especially on the TSX. And it's the third strong year of returns. Often, I know people are quite bullish going forward, but I think there's a reason to be cautious as well, because usually you don't have good returns after good returns. But if we do walk through 2025, if we look at Canada, it was really driven by two sectors: materials, which includes the gold stocks, and financials. Those two sectors make up, materials and financials, 50% of the market. And not only were gold stocks good, but a lot of the banks returned 40 to 50+% in market cap, which is quite amazing when you think about it, which is generally good for people's portfolios, because we own the banks, and a lot of Canadians own Canadian bank stocks. Strength in the U.S. market was another year driven by technology and technology-related stocks. The top 7 stocks represent about 34% of the S&P 500 and represented more than 50% of the performance. There was a lot of stocks in the U.S. market that did not do well, so the breadth of the market, again, was not there. It was a very tight group of companies that gave the performance, the S&P, up, like I mentioned, about 18% in U.S. dollar terms. As we walk through 2025, the beginning of the year started off very strong. We had just got off interest rate decreases at the end of 2024, and earnings were coming through. And then we hit April, Liberation Day, which was really about a 10-day drawdown in the market, or decrease in the market, that we hadn't seen since COVID in 2020. But it was a very short time frame. People were worried about recessionary fears from trade, the U.S. tariffs, etc. But the market bounced back quite quickly. I think after Liberation Day, the equity market and investors generally became immune to some of the policies that came out of the U.S. and policies that were around the world. Is there seemed to be something new every day. It was just way too much to digest, and the market just moved forward because of it. And earnings growth came through in companies, which is the most important thing. Is we have growth in cash flows and growth in earnings in companies, and that was to sustain relatively high multiples. The only sector in the U.S. that I would say was, and we had obviously the AI factor, the AI theme, was a positive generally in the market, with the exception of software stocks, which have struggled significantly with the concern that artificial intelligence will be a negative for a lot of enterprise software stocks.